The Morgan Report with David Morgan. Discover how to build and protect your wealth at themorganreport.com.
David Morgan of themorganreport.com for the week ending August 15th, 2025. Well, as most know that at least follow this channel, the famous date, August 15th, 1971, is when Nixon closed the gold window. So we're doing an anniversary. So last week I talked about the silver deficit and how it was obtained using the difference between CPM and the Silver Institute. Jeff got a hold of me, I think that Sunday, and I've edited this slightly, but I've got all the pertinent stuff up there, and I didn't add anything. I did take out a little bit of what I thought was a little bit not necessary. So first point he made, CPM does not include flows from inventories in its supply-demand calculations and balances, never has, never will. We have stated that deficits are covered by metals sold from inventories in nearly half of the years since 1970. I think he misspelled that word, so we'll change that. I didn't catch that before starting the video. So number two, as a result, CPM has often estimated enormous deficits. See the chart below, which I'm showing you. In fact, 23 of the last 55 years, almost half the time. So here's what Jeff sent us. Total supply less fabrication demand. That's what he says. And number three, and this one I edited slightly because it kind of went into a lot of stuff that I thought wasn't necessary. I don't think he'll write me back. He's pretty darn professional, if you ask me. So CPM's data supports and is supported by the price activity over the past 5 decades, while the Silver Institute, GFMS, and Metals Focus have been bullish and wrong for half of the 30 years. So there you go, Jeff. Thank you for the information. It is now posted. I said I would do that on the behalf of everybody because I didn't want to get it wrong. And I will leave it at that and move forward to other things to talk about. All right, moving on. I am on our Twitter feed at SilverGuru22, as you can see. And I just did 2 posts today. I did a lot earlier, but I interviewed Eric Young today. And this is his X feed here. Eric is someone I've followed for quite some time, actually, and he is rather significant in the precious metals out of Hong Kong. And we've had several direct messages back and forth and a few emails here and there. I've been wanting to get him on the Morgan Report for some time, and I finally was able to connect with him this morning. And we set it up before that, of course. So anyway, I recommend that this will be posted for our everybody free list and, of course, members soon. So look for that. Here's some charts that he sent me. So having gone over the silver deficit last week and a correction I just gave you, I'll let you ponder this chart for a minute. And on the gold window closure anniversary, so I said a few things here, and that is, we get, gold's doing this and silver's doing that, and the supply demands this, and there is a deficit depending on how you define it. Why aren't we, just zooming up? There's a lot of reasons for that, but just a few, and here's what I just want to say about it. So first of all, if you look at gold supply and demand, you might expect prices to fall over time. After all, every ounce ever mined still exists. And we add 1 or 2% more every year for mining. In a textbook, more supply with the same demand means lower prices. But gold isn't a commodity. It's money. And a world where central banks are printing currency at 5, 10, even 15% a year, gold's tiny supply growth looks like a rock in a hurricane. The massive above-ground stockpile doesn't hurt prices. It actually reinforces gold's role as a stable store of value. Over time, what's really happening is not that gold is going up, but that paper currencies are just going down. I think we all know that. Silver shares gold's monetary DNA, but here's the twist. Silver is also an industrial workhorse. It's in solar panels, electronics, as you know, medical devices, AI infrastructure, electric vehicles, and on and on. Unlike gold, much of it's used up and gone forever. Look at locked inside products that's lost in landfills because it's too expensive to recover. That means the investable supply of silver is shrinking even as demand grows. So while gold's long-term rise is driven by currency debasement, silver gets a double push. It rises for the same monetary reasons as gold, and it can spike violently when industrial demand collides with investor demand. And I've been saying that for some time, and you all know that. That's why silver's moves can be sharper, faster, and more extreme. Bottom line, gold is the anchor. Silver is the anchor with the turbocharger. Well, I would also add that we are in a position where there's lots of other reasons for silver to be where it is. And I go over that with Eric. I think Eric did an excellent job of giving us some more insight into the Asian markets, the LBMA, and how the markets move and why so much inventory is sitting in the COMEX currently, and what he thinks the collision of these two demands that we just talked about, industrial and investment, may do to the price of silver in the future. So I'll leave it there for now, and I'll be back with you next week with another weekly perspective.
The U.S. government debt is about to cross $37 trillion. That's not a typo. That's trillion with a T. Tariffs are being used to try and even the playing fields. Global supply chains are shifting. Inflation isn't going away. And the value of your dollar? It's quietly being drained while no one is really talking about this. The truth is, we're living through the early stages of a financial reset, whether anyone wants to admit it or not. And if you're still relying on mainstream headlines or financial advisors who just tell you to write it out, you could be blindsided when things really shift. That's where the Morgan Report comes in. For over 25 years, David Morgan has been helping investors cut through the noise. He tracks what actually drives markets, from precious metals and mining stocks to global debt and monetary policy, and show you how to protect and grow your wealth when the system is under stress. This isn't just about gold and silver. It's about having a clear-eyed view of where things are headed and making sure you're not caught off guard. The Morgan Report gives you real research, honest analysis, and strategies you can act on, even in a world of rising debt, unstable currencies, and economic uncertainty. Go to themorganreport.com today, download your free report, get informed, get ahead, and take back control of your financial future. Themorganreport.com, because $37 trillion in debt won't